welcome to the Galileo Monthly Update for June. I've brought a special guest today, someone who really doesn't enjoy the media work, Pragnesh, who heads up Galileo Asset Managers. Thanks so much for joining us.
How's it, Warren? Yeah, thanks. Let's see how it goes.
So Pragnesh, we've got some pretty big themes that are kind of moving investment markets around the world at the moment, and they're having an impact on investments everywhere, including South Africa. So I thought it was a good one for us to kind of just sit down, talk through. We're kind of halfway through the year, and let's talk about maybe the next 6, 12, 18 months as well. And so that's why we've dragged you here today. And maybe just to kick off, one of the questions we're getting a lot at the moment is about the rand, the rand against the dollar, the rand against the pound and the euro, and then about investment markets. A lot of people wanting to look at what they do with the capital that they've got identified to go overseas, and when the rand is really weak, what should we be doing? So maybe just obviously this recording will go out a couple of days after we're talking now, but at the time of speaking, the rand's past 19 to the dollar, and then we've got this question with people saying, what do I do with my investments? And I guess there's two parts to this: the rand against the dollar, and then on the other side, investment market. So maybe at the start, rand to the dollar, what's your crystal ball? What are we thinking?
Yeah, so the rand dollar is always a very emotional discussion, in addition to being a rational discussion. Clearly, in the 19s, where we are at right now, seems to be driven by that ship, the news of the ship in Simonstown last year. But again, if you stand back and rationally look at everything, you can see that, load shedding getting worse, commodity prices down, right? So the where the rand is maybe not so surprising. And then again, news of maybe that the US might raise interest rates again, so that puts pressure. So, 19 where we are right now is maybe not surprising, right? So even if we ignore the ship for the moment, right? So my own sense is that, to the extent that we get no interest rate hikes and a bit of a dovish statement coming from the US Fed, I expect it to strengthen. And if we enter the 18s, as I like to call it, 18s, yeah, then the clients should think about taking advantage of that. Because what you don't want to miss either is that the US markets, although have been up, so like the Nasdaq's up almost 20%, right? After having been down 30% last year, and then the S&P is up roughly 10, after going down also roughly 20 last year. So there's definitely long-term opportunity offshore as well, right? So waiting for the perfect exchange rate that we emotionally feel comfortable with, I don't know if it's a right investment strategy.
So just to simplify for me, the other side of this is to say, if we wait for the rand to go from 19 to 18, that's a few percentage points gain on the one side. But what you might miss out is that the global markets, especially driven by America, might have jumped 10 or 15% in a short space of time.
That's right. All of this is in the realm of possibility, right? And even if you look at local, economists who tend to track the rand, they might have a very positive scenario case, meaning that, maybe we have economic growth and the elections outcome is decent next year, right? Remember, we have elections, right? So we've got a lot of headwinds, right? So, at best it will improve 10%, maybe you get into the 17s instead of the 18s, but it's not like you're going to get to 15, right? So people must just keep that perspective of, do we have relative improvement from where we are now? And in the 18s, therefore, is it worth taking advantage of that? And I would argue yes.
And I think that's it's a powerful point you made about emotion. So we sit here, every time the rand weakens dramatically, we feel it emotionally, and a kind of sense of depression. You add Eskom and now the Russian ship and all that nonsense that's going on around it. It is depressing. But I think to take a rational view on this is to say, don't focus so much on the rand that you miss out on a fantastic investment opportunity globally. And so maybe it's a fair point. Maybe from a financial planning perspective, I would say, if you've got significant money overseas, there's nothing stopping you being a little bit patient with your allocation offshore. In other words, if you've got some money to deploy, you don't have to do it all in one shot. You can do it in batches to go over. And equally, to do something, every 6 months or every year, if that's what most people are doing, don't worry then too much about whatever the rand's doing right now. Because if you're doing it in a programmed way, you're getting opportunities to buy the rand cheaper and more expensive. And I think the one conclusion is we're sitting here, and what we can tell anybody with absolute certainty is we actually don't know what's going to happen tomorrow. We can have thoughts, we can guess, but we don't know.
No, that's right. Yeah, so it's very difficult to forecast, right? Absolutely, nobody has gotten it right. I mean, at the beginning of this year, right, in January, almost every economist was saying the rand is going to strengthen this year, and look where we are, right? And at that point, nobody took advantage of the rate in January, thinking, hey, it's going to improve. Let's wait.
They kept waiting, yeah.
Right. So you can't really say. And so therefore, I'm just prepared to say that if we get a flat outcome from the Fed with some dovish language, expect the rand to react positively. And especially if we get an interest rate hike as well.
So that maybe takes us to maybe just looking out globally for the next 12, 18, 24 months. What we're talking about there is the big driver of everything is inflation in America and what the Federal Reserve does as a result. So if inflation kind of carries on turning over and going down, at some point, and it may be in days or weeks or months, the Federal Reserve in America will eventually come out and say, we're done with raising interest rates for now, and at some point thereafter, we will look at dropping rates. When that happens, markets will find that very positive.
That's right, they'll find it very positive. Almost nobody, though, should expect that they'll go to zero again. Right? So we expect higher rates for longer, which I think is a good thing, being an ex-banker. But any signal that they're going to start reducing will be very, very positive for markets and for the rand.
And so then that also leads on to maybe just a little bit more local around the JSE. That kind of a tipping over of interest rates and inflation in America with the positive signals that come out from that, it will be strong. It will mean a stronger rand. It will also mean a recovering JSE because that's money flowing into emerging markets, and ours is not a function of the South African economy, right? Because that's what people focus on. They think, the JSE and the economy are the same, and our economy could be absolutely devastated by load shedding, etc. But Naspers, British American Tobacco, Richemont, all of those will continue to power ahead for other reasons, not for South African reasons.
And add commodities to that, right? So say, for example, inflation is cooling as an example, interest rates are cooling, so financing is available for projects in emerging market countries. That should be positive for commodities. Positive for commodities usually is positive for the rand as well, and positive for the JSE because we're still quite leveraged to mining.
So then maybe just let's talk about the dreaded E word, Eskom and energy and electricity. And I mean, one of the things that's very clear to me is we're getting a lot of news around slow rollout of electricity by government or by Eskom. Slow rollout of bid windows for connecting renewable energy to the grid. All of it's accurate. I think that stuff that's being reported right now is being reported well. What I think is not getting a lot of attention is how much private power is being produced for private use. And I think it's, if you look at the quantum of solar panels that are being bought by big industry, the amount of wind generation that will be used for big industry, not to add to the grid, just for self-use. I mean, my view is we're looking at let's say the middle of 2024 to the end of 2024, where we see a massive reduction in load shedding, not because Eskom suddenly becomes efficient, but because private power starts to solve this problem for itself.
That's right, and you can include municipalities or far, or rather provinces with a vision, right, in the country, where they also tend to say, well, maybe we should regionalize or municipalize, for lack of a better word, our own power generation. Yeah. So all of this adds to capacity, which will be available. And therefore the reduced reliance on ESCOM. I think we should be out of our, or beginning to see the light at the end of a very long dark tunnel regarding power generation.
So then, just wearing my economics hat for a second, the one thing, it's very hard to find anything positive about this load shedding. But one thing is important to note there is economies that like ours thrive on getting fixed investment into the country, fixed investment into infrastructure, and that is what's happening now. Billions and billions of rands are being spent by private power to build long-term sustainable solutions for their own power demands, and that will be job creative. That will be something that over time, where you can create a certainty of energy, does lead to economic growth purely on its own. It's an economic multiplier. And I think we're missing that story at the moment in South African context because we're in crisis. And we are in crisis. I'm not hiding that. But I think it's one of those things, if you'd said 5 years ago, how do we solve our economic growth issues? One of them will be fixed investment in the infrastructure of the country. It's now happening because we're in an emergency.
Yeah. And I think it's bound to increase. And, despite all the bad news and everything, you cannot forget that for this entire continent of Africa, you're still the growth engine and will be the driver for a long time to come, right? And you've got lots of good things inherently as strengths in the country, and it's just a case of leveraging that. But we'll continue to be in a bad news cycle at least until the elections, right? So there's something far out that we think is positive, but in the interim,
rocky road,
and just learn to manage your.
So yeah. I think that's a very good concluding point is for now there is bad news. We all know it. Our media are experts at giving us the bad news, not so good at telling us that there are some positive sides to this story. I think we will start to see some positive news around Transnet as well. Some of our own kind of connections are telling us that they're getting quite a lot of interest from Transnet to involve private sector and helping them with their issues. And let's see how that story unfolds. And then kind of batten down the hatches. It is tough now. It is a hard time to be a South African. It doesn't stay like this. Eventually the cycle turns.
Yeah. And so therefore stay the course.
Stay the course. Thanks so much, Pragnesh. We look forward to having you on the show again.
Yeah, thanks. Thank you, Warren.